The world's biggest steel producer is sounding the alarm about a crisis in China with the potential to send shockwaves across the globe. The chairman of Baowu Steel Group is warning of a deeper industry downturn for the metal than the trauma seen in, say, 2008 and 2015, with conditions in China proving to be, in his words, longer, colder, and more difficult than expected. He described it as a harsh winter. Bloomberg Intelligence senior analyst Richard Bourke is here. Richard, was this surprising to hear such frank comments, such a frank description?
I mean, it's probably surprising that there was a frank description, but I think the market kind of expected, given what we've seen over the last few, really the last year or so. You've seen exports from China go up markedly than it had in the past from previous levels. So I think the market may not have been that surprised. What may be surprised was the frankness of the chairman's comments.
Absolutely, especially from a company that's state-owned, owned by the central government. So he says the challenge will be worse than in 2008 and 2015. How do you read that? What's different about it this time? Well,
what's different is there's probably not a stimulus that the government can come in the past and stimulate the property sector. You know, the Chinese policy has changed to let's move more towards infrastructure, away from the property sector. And what has happened is in the past, in 2008, 2009, 2015, 2016, they launched a huge stimulus projects that stimulate the property sector. Yeah. And what happens is now we have an excess of property and buildings.
Yep.
Landowners aren't buying land, which finance the local Chinese governments. So local Chinese governments don't have money then to pump it into infrastructure and things along those lines. So that's the big difference.
Right, and it goes on, the ripples go on. Right. So in terms of ramifications for the global steel industry, and in particular the U.S. steel industry, how are you thinking about this? The U.S. Steel and Nippon Steel are still trying to get their merger approved. You talked earlier about rising Chinese steel exports. Is that what we're going to be contending with? How should the U.S. steel industry brace itself?
Well, the U.S. steel industry is probably one of the most protected markets there is in the world. That being said, we do have indirect consequences. For example, we've heard steelmakers complain lately about imports or exports from Mexico coming into the country. Mexico is part of our trade agreement, so why would that be a problem? Well, what the problem is it's not Mexican steel, it's imported from Vietnam.
Oh, I see.
That then
got redirected.
Has been redirected, but has originally started in China. So China has, basically transshipped steel to Vietnam. Vietnam ships it to Mexico, and now we have that. So the U.S., like I said, is probably the most protected market, but we've still seen implications flow through.
Yeah.
Where we're probably going to see worse
impact
is with Europe. Europe is probably the most susceptible to these imports coming out of China.